Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Midweek check-in. Welcome to Modern Investing Techniques, episode 100. Today is July 8th, 2026. I'm Patrick, broadcasting from Vancouver. Midweek, let's reassess this week's positions and look for fresh setups. That's episode 100, a big milestone. Thank you for being here. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Oil prices surging nearly 6% on the Iran ceasefire breakdown gives Canadian energy investors a narrow window to reassess exposure before broader equity futures slide deepens. The S&P 500 closed at 7,504, down 0.4%. The NASDAQ Composite closed at 25,819, down 1.2%. The TSX Composite closed at 35,273, up 0.2%. Energy names are leading while tech and growth stocks lag on the risk-off move. Our simulated portfolio shows a cumulative profit of $304.47 across 40 trades. That translates to positive 11.2% alpha versus the NASDAQ across 35 benchmarked trades. The current streak stands at one win. Strategy Spotlight today focuses on capturing oil shocks through individual producers instead of broad commodity ETFs. Energy exposure through producers rather than broad commodity ETFs can capture short-term price spikes when geopolitical shocks hit supply routes like the Strait of Hormuz. Today's nearly 6% oil jump after the U.S. revoked Iran's oil sale license shows how quickly margins expand for upstream names when inventories tighten. Screen TSX listed energy producers for free cash flow yields above 8% and debt to equity below 0.5 using your broker's screener. Size any position at 3 to 5% of TFSA capital. The approach worked best in 2022 when similar straight tensions lifted Canadian energy names 40% plus over 6 weeks. Pair any entry with a same-day volume check against the 20-day average to avoid false breakouts. This method avoids the dilution that comes from holding a basket of non-producing names inside a commodity ETF. Risk comes from rapid reversals once diplomatic talks resume. Now let's move to the practice investment of the day. This is a simulated trade for educational purposes only. No real money is involved. No new trade today. Only single factor setups are available right now. The portfolio sits in a cold streak. Skipping preserves capital for setups with 3 aligned signals. Those signals are catalyst plus volume spike plus sector confirmation. I am watching K92 mining for a potential entry if its 46,093 ounces of gold equivalent production triggers a volume spike above the 20-day average. The next Monday pick will target the energy sector once oil price momentum shows sustained follow-through, rather than a one-day spike. Yesterday's trade review shows no newly closed trades since the last review. The most recent practice investment remains open and pending its scheduled evaluation. No new realized result to report today. Now let's look at 2 platform tools that help with decisions like these. Wealthsimple's tax optimization dashboard flags unrealized losses across your TFSA holdings and suggests substitute ETFs that satisfy the superficial loss rule. It automates ACB tracking and T5008 reconciliation that brokers often leave to the user. The tool is available at no extra cost to Wealthsimple clients on the core or premium tier. Questrade's built-in options chain tool lets you compare covered call premiums across the same underlying on different expiries in one screen. It surfaces annualized yields that most retail platforms bury in multiple clicks. The tool is free for all Questrade account types. Quick hits start with Canada's biggest banks. The Big Six comfortably exceeded analyst forecasts, pushing share prices higher even as broader markets weakened. Add RY and TD to your TFSA watch list and consider scaling in on any pullback below the 50-day moving average. Next, K92 Mining reports record Q2 production. The company delivered 46,093 ounces gold equivalent with record lateral development and ore tons processed at its K92 mine. Place K92 on your precious metals screener with an alert for any close above the recent high on volume 50% above the 20-day average. Apple commits $30 billion to Broadcom for U.S. chip making. The multi-year agreement expands domestic semiconductor capacity and locks in supply for Apple's custom silicon roadmap. Review any existing AVGO exposure in your RRSP and consider trimming if position size exceeds 4% after today's move. Halifax faces a housing crunch from a submarine contract. The TKMS submarine build will bring thousands of skilled jobs over the next decade, tightening an already constrained local market. Avoid adding Halifax area REITs this quarter until new supply data clarifies the rental yield impact. Portfolio performance stands at 40 total trades. The win rate is 58% with 23 wins, 16 losses, and 1 break-even. Cumulative profit is $304.47. Matched window alpha versus the NASDAQ is positive 11.2% across 35 benchmarked trades. Average return per trade is 0.76%. Now here is something most retail investors get wrong with tax loss harvesting. Imagine you bought XIU last month at $38.50 and it now trades at $36.80 after the broader market dip. Selling locks in a $1.70 per unit capital loss that can offset gains elsewhere in your TFSA or RRSP. The superficial loss rule blocks you from repurchasing the identical ETF for 30 days. The pro move is swapping into a near identical but distinct product such as XIC for that window before switching back. The 2024 inclusion rate increase to 50% on gains above $250,000 makes harvesting losses even more valuable. Every dollar of loss now saves 25 cents in tax instead of 20. Losses carry forward indefinitely and can be applied against future gains or even up to $3,000 of ordinary income per year. The T5008 slip your broker issues in February reports proceeds but not your adjusted cost base. Track ACB yourself or use software to avoid CRA disputes. The biggest mistake is selling and immediately buying the same ticker. Always map a 30-day substitute pair in advance using your brokerage's ETF comparison tool. Before we wrap, tomorrow I will check whether oil momentum has sustained enough to trigger an energy sector entry. That's your modern investing techniques for today. Every episode makes you a sharper investor. Subscribe, leave a review, and we'll be back tomorrow with more market intelligence. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets. Each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Planetarian Daily. Daily breakthroughs in science, health, and longevity. Find every show free at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the